In this video, I will show you how you as a business owner can get an unsecured loan with no personal guarantee, and the best places and the best lenders you can go to get those unsecured loans for your business. Hey everybody, welcome to my channel. I am your host, Leo Landaverde. I'm a business coach and also CFO helping you scale your business. If you're ready to grow your business to 7 figures and beyond while creating the financial freedom and the lifestyle that you want, then subscribe to this channel and don't forget to hit the bell and you'll be notified every time a new video comes out.
Hey everybody, this is Leo Landaverde with Greenland Advisors, creating more profit, more value, more freedom for your business. So today we're talking about business loans where there's no personal guarantee. And we'll start with what is a personal guarantee. There's a lot of misconception out there as far as what personal guarantees are. A personal guarantee, also called a joint and several liability, essentially makes you a cosigner on your business, to your business on your loan. If your company can't pay off the debt, then you're legally liable for making payments. And if you can't do that, then the lender can legally claim your personal assets such as your home, car, and investments for repayments. So here's something that you need to know as a business owner. Whenever you can, you gotta stay away from a personal guarantee, because in doing so, you're making a cosigner with your business, as I said earlier. And a lot of business owners go not fully understanding, and they just sign everything on the small print. You know, with everything nowadays with DocuSign, a lot of my clients, I ask them to actually download the documents, review them with their attorney, making sure that what you're signing you can live with. And a lot of them don't really read the fine print, and what it says that a personal guarantee, joint and severable, as we talked about, can actually force you to declare bankruptcy if you're not able. Usually what happens, a lot of businesses, they end up with no choice but personal bankruptcy. Why lenders require a personal guarantee? Small business lending is risky. Think about it. Well, the whole definition of being an entrepreneur is someone who takes a risk. The word entrepreneur means taking a risk for the potential profit. So it's inherently risky. And the mortality rate in businesses is way too high for lenders not to pay attention to that. So as a result, most business lenders have minimum requirements for revenue and the time of business, plus collateral. With unsecured loans, however, the lender needs some form of certainty that it will get its money back if your business doesn't work out. This certainty comes in the form of personal guarantees, which is really the topic of this today's video. So keep in mind too that if businesses are structured to limit your liability, that doesn't apply to your personal guarantee. You could have a limited liability company. You can have a professional corporation. You can have a C corporation. You can have a small S corporation. But the minute you tie yourself in personally, all goes out the window. So the piercing of your corporate veil doesn't really protect you once you personally guarantee something. So I'm gonna go through some examples of what some of the popular lenders out there are today, and then we'll kind of end up looking at which ones makes most sense at different stages of business. So there's Cabbage, very, very popular with a lot of young business owners. They've really made a dent in the market. You have On Deck, who's been around for a few years. They're in what I call the fintech industry. A lot of them are backed by venture capital, in which they really look at this as a great business venture because there's a hole in the market. As you know, most businesses are turned away by banks, probably higher than 60%. Of all business applications get turned down by banks. So there's a marketplace for these types of loans. Now, you've heard of a company called Street Shares. They have really gone out there to really make an effort for themselves, and you'll see the twist and how they're able to do that and why I think that may be a good sense for you. There is Blue Vine. If you work with, they were one of the early adopters of working with QuickBooks. If you have QuickBooks Online or QuickBooks Desktop, you've noticed, particularly online, where they're really pushing Blue Vine. and also Fundbox. These two are very much connected with QuickBooks Online, and they make it very easily and very convenient for you to, with one press of a button, they can actually gather all your data, and you're giving them permission to look at all your financial transactions, and they can gauge how much they can lend you, but that comes at a cost. So this is what it looks like. And this is what I want you to pay attention to. This grid, this matrix kind of tells you the five lenders that are specifically geared to the kind of the up and coming, the young small businesses. So Cabbage, you have to have been eligibility 1 year in business. You have to have 50,000 in annual revenue, which doesn't really take much, right? No credit score requirement. You can get loans from anything from 2,000 to 150,000. So it's a pretty wide gap. And the cost and repayment terms is either 1.5% to 10% per month on either 6, 12, or 18 months. See, you gotta go in it with eyes wide open. It can be very, very expensive. A run rate of 10% per month is 120% APR per year. And they do require a personal guarantee. So if you want a business loan with no personal guarantee, this is an it. On deck, 1 year in business history with 100,000 in revenue, so they are a little higher, twice the minimum requirement from Cabbage, and you do have to have a 600 credit score. Now it makes sense because On Deck has been in the business a little longer, so they've probably been burned a few times, and Cabbage is more of an up and coming. You can get anything from $5,000 to $500,000 of working capital for your business. The rates are anything from 10% to 79%. And yeah, I know if you're wondering, yeah, that is annual, and yes, that is outrageous, but there's clearly legitimate because there's a need for it. And you can get loans, repayment terms from anywhere from 3 to 36 months, and they will require, not only do you have to pay the 79% APR, you will have to personally guarantee, and they will put a lien, which is called a universal commercial code filing, which is basically a blanket security on your business. No, your business will secure it, and you're personally guaranteeing it. You decide. Street shares. 6 months in business, 25,000 in annual revenue, and 600 FICO score, 2 to 250,000, as little as 6.5 to 39% APR. That sounds a lot better than On Deck and Cabbage. And here is the thing I like about it. Personal guarantee and lien for lines of credit and larger loans. So for this loan, if you're looking for the loan that is between $200,000 and $250,000, so long as you have a FICO score of 600 and 25,000 in annual revenue, you do not have to personally guarantee it. So they get an endorsement from me. Bluevine, Bluevine and Fundbox are both connected to QuickBooks. You have to have been in business for 6 months. $100,000 in annual revenue, or basically at a run rate of about $8,300 a month, and a FICO score of 600, you can get up to $250,000. The rates are a little better than On Deck and Cabbage, but not better than Street Shares, and you can get repayment terms for up to 12 months, and you will have to personally guarantee it, and they will put a lien on your business, a UCC1. Fundbox, last but not least, 3 months in business, 25,000 in annual revenue with a 500 FICO score, which is not very much. You can get up to $100,000. It starts at 4.66 APR, you see here, and you can get repayment up to 24 weeks. Now they have a very aggressive repayment method, and there is a personal guarantee on higher credit scores. So no personal guarantee for Street Shares and no personal guarantee for Fundbox. So if you want a business loan with no personal guarantee, you know which you should choose. Now, as in everything, you gotta look at lenders are constantly doing their agreements. There's, every once in a while you get a revised agreement. You gotta look at those, because if you say you got a loan from Street Shares today and you repaid it in 6 months, and then you decide to borrow again, they may have changed their requirements, and they will end up using a personal guarantee. Particularly if you're getting lines of credit. For lines of credit, most lenders will require some type of personal guarantee because it's more convenient for the lender to deploy all the capital at once, rather than having the luxury of using the funds whenever you need to. There's a whole nother video that where I discuss business loans versus credit lines of credit that you should actually watch. So hopefully that let me know if this was helpful to you and if it will help you with your decision-making process.
Please comment below and let me know which of these lenders you're most comfortable with and you would apply today. Also, if you want to join a community of like-minded successful entrepreneurs just like you, then join our Facebook group at the link below, where I share tips, tactics, and strategies on how my clients are growing their businesses to 7 figures and beyond.